Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Thursday, April 18th, 2013. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low. A black body candle denoting the sellers making an amount of net bearish progress on the day between the open and the close, and that maintains this momentum from the sellers to the downside. Certainly not as much momentum as the previous day, roughly about half, and it does suggest that there is a possibility of a change of trend. Just looking at the position of the close within the range, it's closed between the midpoint level and the low, suggesting that the sellers have closed with control once again, as they did for the previous day's trading. So the buyers haven't taken control, but it is fairly weak control. So it does raise some doubt about continuation of the trend to the downside. The important factor here with this candle today is this shadow on the bottom, and it highlights the interaction of the market with this level of support that I highlighted previously as an intermediate level for these swing lows, and an area where the market has been rejected from today. The market has failed to close down below there, and that also adds weight to the argument that there is a possibility of a change of trend. The only problem is though that the trend is down, so we do need to bear that in mind. Now, another limiting factor to any change of trend to the upside is the resistance at 1555, a previous important level of support and resistance in the recent past and prior to this nearby trading. So it is going to be an important barrier to the market making a higher high and a higher low, but as will the lows here on these swing lows, this will be an important barrier to the market continuing the trend to the downside. So we have a rather indecisive market at the moment that's bound between strong resistance close by and strong support close by. Now, if this market does trade down through this support in a bearish manner, we do have the top of the cloud trading quite close to the market. So we do expect that the buyers will come in down around this area, and this area is strengthened by the recent resistance as well down around this 1523 level. So if this trend does continue, it's most likely that we will see some buying coming in down around this 1523 and will limit potential downside. The market could potentially trade down through to the 1500 round number level of support, but we are likely to meet some very strong support and some buying coming in anywhere within the cloud. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market is trending down, and previously we saw the market trade through important levels through the 100%, and today we've seen the market test just to the 161.8% probe down below there and close just at that level. There is a slight suggestion that there is a possibility of a change of trend, but if we look at the short-term dynamics, the sellers still are maintaining their downside momentum. They have lost some strength, but we're not seeing any strength from the buyers at the moment. So a slight amount of confidence in a change of trend, but we really do need to see some story from the buyers in terms of strength before we can feel more confident of a change of trend. In terms of the Fibonacci retracement, here we've seen the market now test down below the 100% level, rejected from there, failing to close down there. Once again, a suggestion of a change of trend, so let's watch the high of the current candle for a potential higher high and a higher low. But by the same token, with the lack of strength from the buyers, we should be watching the low for a potential continuation of the trend to the downside. We do have the 161.8% level as the next target if the market does trade down through there, but that is in the middle of the cloud, and we will need some serious selling for the market to test down to those levels within the next week or so. In terms of Ichimoku, a bullish market in the long-term time frame. The bias is bullish with the market trading up above the cloud, but the market is retracing back to the cloud, and it was looking a little bit overextended, trading up here at around 1600. I did suggest that there was a possibility of the market retracing back towards the equilibrium suggested by the cloud. The cloud will potentially come into play in the next couple of days and will or has potential to offer itself as support for this market, and that would be the most likely scenario, that the market tests down to these levels and then bounces off again. In terms of the medium and fast term timeframes, the market is trading down below the Kijun Sen and the Tenkan Sen. So we have a bearish market in the medium and fast term timeframes, and now for the first time in some time, the ticker span is below the corresponding price action. So that's giving us a bit of a clue that price action is now supporting this move down below the Kijun Sen and the Tenkan Sen in that short-term time frame, and no longer supporting the bullish bias in the long-term time frame. So that could be significant for this market. But moving forward, basically the market is favouring a breakout down below this minor support level. It has been tested on 3 occasions and been rejected from there, but we do have very strong resistance close by 1555. If the market can trade in a bullish manner up through there, then we have a level of resistance around the Kijun Sen and Tenkan Sen at 1566, and then up to around this 1576 level. But we will need to see some decent bullishness for that to occur. Crucial, as I've mentioned, is this area around 1540. If we do see solid bearish activity down below, we could quickly see the market testing down to around the 1523 level.